Good morning, everybody. It's Wednesday, September 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had December corn up 2.5 at 406 3/4. November soybeans were up 7 at 1004 1/4, and December Chicago wheat was up 2 3/4 at 577. This morning, consumer price index was out up 0.2%. That number came back as expected. Interesting number to note, the 12-month inflation rate went down to 2.5%. That's down 0.4% from July, so slightly better than analysts had expected, putting us at about an 85% chance for a quarter percentage point cut here in the next Fed meeting. With that, guys, good morning. Dustin, maybe a few thoughts here. Got corn back, kept corn up back above $4. Beans kind of broke $10 overnight and rallied here early this morning. Got the USDA report out tomorrow morning. Maybe just a few thoughts and we'll throw it around the room.
Yeah, I think, there's really not much currency move out of this. I think that the numbers definitely just point to what the market's expecting for that, rate cut. And I think just like the start of rate cuts is the important part. The dollar index, I think it's important to remember it's like the dollar index is still fairly strong to other currencies, but it's weak against hard assets, like, point to gold near $2,500 an ounce. I think we still have, that underlying backdrop of rising asset prices, just think of all the inflation data that's come in the last 4 or 5 years. Rising asset prices is still kind of sticky. I mean, we're still looking at a higher prices than we were 12 months ago. But in the meantime, we're going right into harvest. And I think our focus is going to shift to like, how fast does the pipeline fill up and how big are these yields coming out? So far, we've heard some pretty good anecdotal yield reports to be expected in Illinois for early harvest. USDA has been writing them at a 225 yield, which is just a smash away record from the previous all-time record. And Iowa is also projected to be at a record as well, which, very likely it looks to be the case just based on yield counts that we've seen and very comprehensive yield check studies from, like Pioneer, for example. So I think that there still will be some harvest pressure here. This is my personal opinion as we get into it, because there's a lot of corn that is wanted to be sold that hasn't been sold yet. And that should be where we don't want to kind of get too bogged down from what's happening in the outside markets and just focus on what harvest is going to do to us. This is where I think it's going to be the front end that should be the focus for the weakness, and the back end should be the focus for, well, what's a long-term sustainable price. So that's my thought going into harvest is it might be more about the spreads than flat price at this point.
That's good stuff. Jace, what's on your mind this morning?
Oh, not a whole lot. I mean, I think a lot of the price action yesterday was outside markets. Crude was sharply lower. You had the dollar kind of strong. You had the real that was really weak. Beans kind of followed right with everything else that was going on. Weak crude, weak currency. So everything kind of rebounded overnight, and it looks like beans did as well. Kind of a chop trade, really, trying to figure out where it wants to go. Going into this report tomorrow. So I think that's going to set the stage for prices moving forward here for the next month. So yeah, I'm keeping an eye on that. It looks like that tropical storm maybe moves right up the middle of the central U.S., maybe kind of right over the Mississippi. So I'm kind of curious if that's going to help river levels. I don't know if you guys have seen anything on that or the projections, Dustin, on if they're projecting that helping out. That might be something to keep an eye on.
They are not about it.
It's not going to help out. Okay.
Well, I mean, that's the thing. I mean, I'm just going off of the NOA website, and like they have today, I think we're at minus 7.8 feet in Memphis, and they're projecting by Wednesday of September 25th. So that's 14 days from now. They're projecting it down to 9 under. Last year it was 12 under when we got into October. That was causing all those issues. River's pretty low. I don't see how it doesn't help out personally, but that's not in their forecast at least.
Right. To your point, I think we need more systems up north, right? We northwest where a lot of these tributaries run into the whole river system to get that water level back up.
Right. The Mississippi Basin is quite large to the west. I don't know enough about it, but like I would think this should be in their model, right? They forecast where we should be, and maybe it just takes longer than I know. So I really kind of, and anyone in the comment section that's got any information on that would be good. I have to look into this more, but right now the forecast is for -9 within 2 weeks, so it doesn't appear that NOAA is projecting it to help much. So.
Yeah. Well, if it does it with this large crop coming, that's going to be a logistical problem, you would think. It's going to affect basis short term, at least.
Right. Yeah. I mean, we were seeing this already. Like yesterday, there's some softening over at Memphis for soybean basis. We're seeing this in the spreads. SEPDES, I think it traded basically at full carry here yesterday. We're getting into that delivery window. It's kind of a precursor to what happened last year. Except DEES got really wide, then DEES March got really wide. It kind of comes down to like when the actual sellers come to the December contract, that's when it's capable of doing it. That's my personal opinion. So I still think it's a good chance that spreads are wide despite all of this extra demand that we have this year going to Mexico.
Justin, noticed overnight we had 54 bean deliveries, so we're up to 458. Corn had 62, so we're up to 576. So we talked a little bit about that yesterday too, just still seeing some deliveries pop through and kind of what that's doing to some of these spreads that Dustin's talking about as well.
Yeah, I think it's just, pointing to what Dustin and Jason were talking about. I mean, space is already tight and we're going into a big harvest. We're going to fine tune what that number is, as we've talked about for quite a long time here. So, the crops are going to be big, especially along the river system, the delivery system, and it's just a matter of how big. But either way, it's big enough in a short amount of time, right? And when you already have a big old crop, carry in, I think the difference between this year and last year, in my opinion, is that we have a bigger carry-in on the delivery system than we did last year. Last year was a problem. So I'd be curious. I do think flat price may have done its thing. I think there's a good chance that we've traded the biggest crop that we're going to see. That's just my personal opinion. We have to, we'll have to get more evidence and see what the actual, yield monitors say and what the actual yields are. We're expecting a really big crop on our farm, for example, but we won't know till we actually get in there, see how it finished off, see what the test weights are. But again, that's things we're projecting, a 225 Illinois yield. I don't see any evidence that says it's not that from what we've seen so far. But there's a lot of states that have to hit those kind of recordy type numbers to get the national yield where the government has it, or, like I said, pro farmer for beans and corn. So I think that's the big part here. Have we already traded the biggest number? I think we certainly got to pretty fearful levels, call it 2-3 weeks ago going into first notice day. We'll see here. I think we're going to quickly, once we kind of get, I think, comfortable with what, that range is on yields, I think we're going to start looking to South America. We're going to start looking forward to, is that rainy season going to kick in like it always does? Obviously we're dry, but like we talked about, the dry season there is very dry. So when you look at percent of normal, it looks really bad. But the deficits can get made up really quick. If the rainy season does kick into gear, that'll be an afterthought. So kind of try to keep all that stuff balanced, when you think about where prices should go. At the end of the day, the global bean balance sheet is pretty burdensome. And if you go by what, the intentions are, for new acres down in South America, if they have a normal to good growing season, it's going to be a problem. It's going to be definitely a headwind, especially if China doesn't kind of rebound here on their economy, on their demand. If they kind of stay stagnant or kind of stay in a deflationary environment, that'll be tough for us, I think.
Very good.
One thing I want to mention too, because you mentioned oil, or someone did, in oil keeps it sliding in recent days. We're back down to the mid 60s. One thing I think I found really interesting that I wasn't really aware of is how low stocks we have, like Cushing, Oklahoma, for example, like stocks are extremely low, but it's the paper demand is for longs is extremely low. And that's what's really kind of driving price. So you're rubbing against like kind of lack of financial demand for oil futures. Like I think the combined WTI and Brent positions are at like record low for CTA holdings right now. And yet we continue to see stocks declines. So like there's something kind of weird happening there in that market. So I would kind of keep an eye on the energy markets for the next couple of months. That could have an impact as well.
Yeah, definitely. I mean, we've gone from basically $80 to 65, so that's been just tough. But I mean, we also have gotten cheap enough where we've seen good demand. We've seen good margins. So we are priced to pick up demand. And now I think it's just in the short run, right? It's kind of that supply demand balance going into harvest. So if we can get through that, and I agree with Dustin what you said on all these, just generally weakness. This money supply is very, very high. And maybe it's kind of waiting to see how the elections go and what policy is going to be. Even the debates last night, right, talking about increased tariffs, and there could just be a lot of sideline money that's just nervous about investing in commodities until there's more certainty going forward.
Yeah. Oh, very, very good. Rylan, we got a couple of minutes here. Pretty quiet trade in the livestock yesterday. Box beef keeps edging lower. What do you got for us this morning?
Yeah, it was a little bit disappointing yesterday on the cattle side. I think just overall, everybody's looking to see if the beef market can bottom this week. And seasonally, October has bottomed by now, and we've got this big discount on the board. And I think we're starting to see some slow rollout in cash. It looked like there was a little 182 in Iowa yesterday, 289 dressed. So, I mean, overall, you just kind of a steady indication so far, but it's definitely not going to be. I mean, we need the South to trade and see where they're at, and it'll sound like asking prices around 182 as well. So we'll see. I mean, open interest was up 797 contracts, so maybe we were seeing some new selling, maybe a little bit of panic, just from guys trying to sell into that bounce. But seasonally, we look for the market to go here, and we've got this big discount on the board. So hopefully we can see that narrow. We can see the beef prices bottom, but there just hasn't really been an indication of that. So I think we're all just kind of sitting on our hands waiting in that regard. And on the hog side of the market, we were the same thing, kind of disappointing action, a new low for the move, and open interest down 3,000 contracts. I mean, we're obviously seeing the managed money start to bail out on this, and it feels like they're on the wrong side of the trade, especially given that cash and cutout are both kind of edging lower. Cash is holding up okay, but overall, it just feels like between now and the end of the year, those prices should soften, and they've been really adamant about carrying this massive kind of long position, likely trying to play that seasonal in the future. So we'll see, but some of the fundamentals are just leaning a little bit more towards the bearish side of the market. Weights were up 3.3 pounds from the previous week. We're not seeing, we're seeing like maybe a little bit pickup in demand and cutout, but overall prices are still kind of drifting lower. So just feels like the risk is a little bit on the high side to the downside in the hogs right now. And we'll see how the managed money wants to play it now that we're starting to fall below some of the major moving averages.
Very good. I appreciate the update. A couple things to point out. We will have export sales tomorrow morning, 7:30 Central, followed by the USDA report at 11 o'clock Central. All the guys will be back at 11:15 tomorrow as well, 11:15 Central, for a bonus War Room edition with our initial reaction and updates on what the report had to say. So please don't hesitate to tune in for that bonus War Room tomorrow. Also, guys, real quick before we come into the open, today being 9/11, 23 years later, the day still hits the same for a lot of us. And we just want to extend our thoughts to everybody that was affected. And, like I said, 23 years later, it was still interesting to see this morning that after a fiery debate last night, Harris and Trump were still, next to each other there in New York this morning, honoring the fallen. So anyway, hope that's on everybody's minds today. And our thoughts go out to everybody that was affected by that senseless tragedy. So with that, we open the markets here. December corn up 1.5 pennies at 405 3/4. November soybeans up 7 10.04 1/4, and December Chicago wheat's up 2 1/4 at 576 1/2. We appreciate everybody that tunes in on a daily basis. If it doesn't cost you anything, throw us a like or subscribe. We certainly appreciate it. Keeps you up to speed on everything AgYield, opens up that premium content for you. So throw us a like or subscribe. It goes a long way for us. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.